Housing. Will the market crash? Real estate. Is a housing crash coming? The housing market is a topic that touches us all, whether you're a homeowner, a renter, or someone dreaming of buying your first home. The state of the housing market can profoundly impact your life. And lately, one question has been on everyone's mind. Is the housing market going to crash? Welcome back to the channel. Today we're exploring this complex and often misunderstood topic. But before we begin, let's make one thing clear. Predicting the exact future of the housing market is about as easy as predicting the weather a year from now. What can we do, however, is to explore the factors that influence housing markets and equip you with the knowledge and the tools to think critically about housing market trends and make informed decisions. We'll explore what actually happens during a housing market crash, what factors contribute to market instability, and how you can think about your own housing decisions in these uncertain times. So, what do we mean when we talk about a housing market crash? It's more than just a dip in prices. In real estate, a crash typically refers to a significant and rapid decline in home values, which often occurs alongside a sharp decrease in home sales and an increase in foreclosures. The 2008 housing crisis is a prime example, with its devastating impact not just on homeowners, but on the entire global economy. But it's crucial to remember that not all housing market downturns are as dramatic as 2008. Markets can also experience more gradual declines or periods of stagnation. These can be challenging too, but they're a far cry from the dramatic plunges that define a true crash. To understand whether a crash might be on the horizon, we need to look at the factors that drive housing markets. It's like a complex machine with many moving parts, all interconnected and influencing each other. So let's start with the broader economy. When times are good, when jobs are plentiful and wages are growing, people feel confident about buying homes. They're willing to take on mortgages and banks are eager to lend. But when the economy stumbles, when unemployment rises, when a recession looms, confidence evaporates. Suddenly, buying a home seems risky, and those who already own one might struggle to keep up with payments. Interest rates play a huge role too. They're like the throttle on the housing market engine. When rates are low, borrowing is cheap, which can drive up demand for homes and push prices even higher. But when rates rise, borrowing becomes more expensive. Monthly payments go up, and fewer people can afford to buy, leading to price declines. Then there is the balance between supply and demand. It's basic economics, really. When there are too many homes and not enough buyers, prices tend to fall. When there are too few homes for all the people who want to buy, prices usually rise. But it's not just about the number of physical structures either. Changes in where people want to live, driven by factors like job opportunities or lifestyle preferences. These can create hot markets in some areas and cold ones in others. Sometimes the very psychology of the market can lead to instability. When people buy homes primarily as investments, expecting prices to continue rising indefinitely, it can create a speculative bubble. This is often fueled by risky lending practices where banks give mortgages to people who may struggle to repay them. When these bubbles burst, it can lead to a market crash. Government policies and regulations also play a role. Changes in tax laws, lending standards, or housing policies can influence buying and selling behavior and affect home values. It's a delicate balance. Policy shifts can have unintended consequences on the housing market. Now, given all these factors, how can we assess the current state of the market? While we can't predict the future, there are some signs that economists and market analysts often look at. They might examine or look at how home prices compare to average incomes in an area, or how the cost of owning a home stacks up against the cost of renting. They'll look at how affordable homes are for the average family, taking into account factors like income, home prices, and mortgage rates. Other important indicators include the pace of new home construction, mortgage delinquency rates, and the levels of home sales and unsold inventory. Rising delinquencies or a buildup of unsold homes could indicate trouble is brewing in the market. But one thing to remember is that real estate is inherently local, and conditions can differ greatly between cities or even neighborhoods. What's happening in the New York City housing market might be very different from what's going on in a small town in the Midwest. So given all of this, is the housing market going to crash? Well, the honest answer is we don't know for certain. What we do know is that housing markets are cyclical. They go through periods of growth and decline. Sometimes these shifts are gradual, and sometimes they're more sudden and severe. Instead of trying to time the market perfectly, it's often wiser to focus on your personal circumstances and long-term goals. Short-term market fluctuations matter less if you're buying a home to live in for many years. And over the long run, home values have generally appreciated, although past performances don't guarantee future results. Your decision to buy or sell should be based on your personal financial situation and life circumstances, not just market conditions. Regardless of what the market is doing, it's crucial not to take on more houses than you can afford. Having a financial cushion can help you weather potential market downturns. The most important thing is not to overextend yourself financially. If you're investing in real estate, consider diversifying across different types of properties or locations. And remember, it's often wise to have a mix of real estate and other types of investments. A home is more than just an investment. It's a place to live, create memories, build a life. While it's important to consider the financial aspects of home ownership, don't lose sight of the personal value it can bring. The question, is the housing market going to crash? It doesn't have a simple answer yes or no to it, does it? Markets are complex and influenced by a wide range of factors. What's most important is understanding these factors, staying informed about market conditions, and making decisions based on your circumstances and long-term goals. But I would love to hear from you. What's your take on the current housing market? What factors do you think are most important to watch? Share your thoughts in the comments below. And if you found this video helpful, please give it a thumbs up and subscribe to our channel for more insights on real estate and personal finance. And don't forget to hit the notification bell so you never miss an upload. Until next time, here's to making informed decisions in the ever-changing world of real estate.